Buy, sell or rent out your property with Century 21 and you could win a 2-bedroom apartment on the Sunshine Coast worth over $400,000. Visit c21win.com.au to find out how.
Welcome back to Your Property Empire. Well, joining me on the show tonight is Lee Hatton, CEO of UBank, and we've just been joined by Charles Tarbey, Chairman and owner of Century 21 Australasia. Now, the RBA slashed the cash rate to a record low of 1.75%, which in turn saw lenders pass on 0.25% rate reductions to customers. So what should customers expect to see with these changes, Charles Tarbey?
Well, firstly, thank you to CoreLogic, because I had a bit with their senior guy, Tim Lawless, on stage, that the banks would pass it on or would not pass it on.
Right.
He said they wouldn't. What he didn't know was I'd already received an email saying they had passed it on. And
inside information, there's nothing better.
The $600 bottle of Grange, which they promptly delivered to the office, and we auctioned off.
Perfect.
And raised $2,300 from that bottle and an old Century 21 tyre. So there you go.
Wonderful.
So what the impact? I really was not happy about it, and I made that comment. I know a lot of people in the industry are happy when interest rates drop. But for me, it's a bit of a scary moment, because all of a sudden people go, you know what, hey, maybe we can go the next level again. And this is what happened last year. When everything was slowing down, the market was getting back to where it should be, there was a drop in interest rates, and then bang, it sparked the market once again and pushed prices to where I think are right on the edge and should not be. And I'm just a bit nervous if it does that again. That's the only concern for me. Obviously, for the people who are paying off their mortgages, great news. But the reality is they've got to be very careful, because the capital gain that they can get in their property could be damaged by that, which is going to be far more expensive than an interest rate reduction.
So you've got to look longer.
Look, it was meant for other parts of the economy, not necessarily the property market. Yes.
Yeah. Now, Lee, we were talking about the budget earlier on. There's been no talk of doing anything for first home buyers in terms of grants and things like that. So do you think they're ignoring the millennials? And should they be concentrating on them, do you think?
So I think there's definitely an opportunity for them to be spoken to. You know, they're a great part of the voting population, and it's a real opportunity to have that connection with them. I mean, we talk about reshaping or reframing the Australian dream. You know, it's not necessarily for them to be buying mum and dad's house, but there's definitely an opportunity for that to be balanced with the discussion that we're having around super. You know, how do you absolutely look for your investment strategies in the future? And they should be targeted in that too.
And Charles, I mean, with the budget, then I guess for people earning over $80,000, then they're probably going to potentially get more money. So again, that's looking after the property investors. Do you think there should be more focus on the first home buyers to help people, the youngsters, get in the market? Yeah,
well, the first home buyers have had a lot of focus over the last 40 years that I've been in the industry. There's always something coming in for the first home buyers. There hasn't been a lot of late, but I think a lot of the first home buyers have taken themselves out of the market in many areas by feeling that the property prices are too high, and they've been discouraged, especially in certain areas. You go back not a year ago, where they reduced the ability for a first home buyer in Auckland, for example, to buy their first home by increasing the amount of deposit they needed, and that really knocked the marketplace.
People,
it did. So I think that it's always good to have something for the first home buyers. I'm not sure what grants are available now around the countryside, because there hasn't been much focus on them. Of course, the Labor government, if they get in, not the government, but the Labor Party, if they get in, they're talking about negative gearing, and that's going to help the first home buyer. Well, I can't see it, and I know you can't see it from our conversations. So I don't quite know what they need to do. But right now, with the market slowing down and changing, the first home buyers are going to have a bit of a chance in the next few years to get in.
Yeah. So I guess with these political parties saying that they're going to do certain things, and I guess the older people don't necessarily believe the political parties, but do you think some of these youngsters could be saying, well, maybe, yeah, I will vote Labor because they're going to look after me more?
Oh, absolutely. I think there's a real case now, and we were talking earlier just about education. You know, we have so much more access to education and information now than we have ever had before. And so I think the new millennials will be looking for that information and saying, what's in it for me? It really is a generation of, I need to look after myself.
And also they were talking about looking after fintech.
Yeah.
Does that put a smile on your face? Is that going to get more entrepreneurs into Australia?
Well, I think the wonderful thing about that is it's actually about innovation in totality. You know, I think Australia has a wonderful story to tell about being innovative, and I think any encouragement, whether it be fintech or other, I think it's absolutely a great way for the nation to focus and actually bring these new skills out, because sadly we are losing talent offshore, and I think that's a massive travesty for us. We should be maintaining it onshore and really advancing it.
And what's this regulatory sandbox they're talking about? It's all new to me.
Yeah, all right. No, you go first on this one.
Having spent years with the regulators, I can tell you now. No, it's really just a chance, I think, for the regulators to communicate really well with the public, to be able to say, look, what does the world need to look like so that we understand it together? I mean, one of ASIC's main focuses is really around clarity, and we talked earlier today about culture. A big part of morphing those two together is to say, you might think you have a good culture, but does the consumer understand it? And so the sandbox really is about bringing that into the forefront and saying, let's get together and have a discussion, and let's not be afraid of it. I mean, at the end of the day, the banking industry really needs to increase the trust, right? And that's exactly what we're endeavouring to do. This supports it.
That's a really difficult one. When I first saw it, I thought of regulatory sandbagging, you know, because that's what it's like from my end of the view. And I have to think about it, sandboxed in. I said, what the hell are you talking about? But I guess it's just a safe platform for people to create.
I googled it and I still couldn't understand it.
No, you can't find it anywhere, you know, but it's a safe platform for people to create and innovate without all of the regulation associated with pilot programs and so on. So they get a chance to muck around and do what they want to do without all of those expenses associated with it. But in your industry, or I guess in our industry, that is really coming through very strongly. Absolutely. The way in which we do everything online. So the trust has to exist somewhere in there.
Yeah.
Let's jump into your numbers, Charles. Let's start off with the clearance rates.
It's been okay. Again, there's been a slowdown. 67.5% has been the clearance rate on a national basis. This time last year it was 78.2%. So it is changing. It's definitely changing, and we've noticed that change over the last few weeks. Sydney was the best performer at 72.6%. Melbourne came in at 71.2%. But nothing else over 70. All the others were in the 40s and the 50s, so certainly different than last year, because this time last year Sydney was at 84.7 and Melbourne was at 86.5. So there's a big change, and this is probably the first real estate winter. I know Evan spoke about it last week. This is probably the first real estate winter we're coming into that's a real estate winter, because we haven't had one for a few years. So.
Now, Nathan was talking about certain segments having more units for sale. What are you seeing homes advertised for sale generally?
They're actually dropping around the countryside. There was down negative 1.06 over this time last week, and New Zealand had a big smash. They went backwards 10.7%, but that's also got a lot to do with the fact that they've actually had a pretty good run with transactions, so they're moving a lot of the stock that's coming in. So that's not a bad thing. But, you know, at the end of the day, with winter coming on, that's generally a time where we see people decide, hey, you know, I'll just leave it for now, or just get comfortable in my home, light the fire and just relax for a while.
And what about rent price movements?
They've been all right. They've been negative 0.24% over this time last week. But the best performer actually this time, again, has done this before, is Tassie, with an increase of 0.58 over last week. And the worst was Northern Territory, Darwin, with a drop of 0.53. Best performer was Melbourne, if you look at the major capital cities, at 0.22. But again, starting from the start of the year, we're still up 0.72% over the start. So the rents are not declining, and they're not really increasing at the same time.
And finally, the vacancy rates.
Yeah, pretty good. Sydney, again, was the best. It came in at 2.14. But Melbourne, wow, came in at 2.34. It's been a long time since I've seen Melbourne vacancy rates in the threes. Perth still sat high at 7.69%, and that's been the one that's been floating between high sixes and sevens for a while. But the average of the three is 4.06%. But I'm still keeping an eye on Perth. When those vacancy rates drops, anybody that buys into property management portfolios here on in are going to do exceptionally well, because their revenue is going to increase as those vacancy rates decline.
Thanks. Now, very, very quickly, whether you're buying or selling, should you worry about the election?
I think we should always be concerned about it. It doesn't really make a difference at the end. We all stop and don't do anything for a while, but I'm a little bit nervous about the negative gearing issue. I'm a bit nervous that it hasn't been really explored to the extent it should be, and the impact it'll have on many, many industries, not just helping one or two.
Charles Tarbey from Century 21, Lee Haddon from UBank. Thanks for joining us. Thanks for joining us at home. We'll be back next week. Until then, I'm Chris Gray. Good night.
The information featured in this program is general in nature and therefore should not be relied upon. Guests appearing on the program may have commercial arrangements with some of the companies mentioned. Before making any investment, insurance or financial planning decisions, you should consult a licensed professional who can advise whether your decision is appropriate for you.